The United Kingdom has always been rich. Since the British Empire took the lead during the Industrial Revolution era, there has been no doubt about how rich the UK is, up until now. For the first time in 40 years, the UK is on the verge of bankruptcy. All the signs point to a financial crisis caused by several things that have happened up to this point. The Russia-Ukraine war has forced Russia to cut short its energy supply to major parts of Europe. The United Kingdom is one of the major dependents on Russia's energy supply. The shortage has led to a surge in electricity tariffs. Reports indicate that an 80% increase in energy prices has left citizens confused about whether the government is trying to make things more difficult than they already are. In addition to this, there are concerns regarding housing. Despite efforts made by the government, gas bills increase on a daily basis, economic activity is at an all-time low, and inflation has risen by about 9.9%. The almighty pound keeps falling against the dollar, and worst of all, the mini-budget plan by the UK Parliament has become a hangman's noose. Join us as we dissect the financial mess the United Kingdom has found itself in. The UK financial crisis started with the gas supply shortage from Russia to the rest of Europe. September marks the start of winter, and gas usage is expected to rise between then and December. With the shortage of gas hitting the UK when usage is expected to peak, there is no magic or economic maneuver that could have prevented a price hike. To help the citizens cope with the stress, the Parliament decided to cap the price of gas at £280 per megawatt hour. This decision didn't sit well with power companies that had to buy gas at a higher rate than required. They were suffering huge losses. To make this clearer, here's an example. Just like you get utilities from retailers who buy at lower rates, power companies have to buy power units the same way. Then, they add the cost of operations before deciding to sell these power units to households and businesses in the UK. In essence, if they bought a kilowatt hour of power at £5, they may have to sell it at £7 to make a profit. But with the gas shortage, they now have to buy it at higher rates. The only way to keep their business running and profit is to increase their selling rates. The government decided to step in and increase the market cap to £520 per megawatt hour. The new market cap equaled a massive 175% increase for citizens, although the government said the price would only remain so for the next 2 years. If gas costs more than it already does, the average citizen is left to wonder how to survive during this period. The market cap meant that the power companies could lose money if gas prices rose to new highs. But Parliament has told them that any losses they have to pay would come from bank loans. Also, citizens have been assured that a £400 discount would be made available to them during winter. However, the problems with this solution are much more than what they aim to solve. The rich and the poor citizens are now being charged the same amount of money on electricity bills. Rich people have no reason to be concerned because electricity may not consume more than 10% of their income. For middle and lower income earners, this means that they may need to spend slightly more than half of their income on electricity alone. Since there is an increase in this same tariff by about 100%, the poor and average earners have to do more just to have electricity in their homes. In this context, the rich get richer and the poor get even poorer. On average, tariffs increased to £0.28 per kilowatt hour around April 2022. By October, this same unit cost had increased to £0.36 per kilowatt hour. UK citizens are faced with the highest hike in electricity bills for as long as many of them can remember. The sad reality is that this hike isn't projected to fall anytime soon. Recent reports show that the increase in electricity tariffs caused a huge increase in consumption levels for the rich and lower consumption for the poor. The logic behind this is simple. The rich can afford to pay their electricity bills with little to no effort since it costs them very little. As for the poor, when you include the percentage interest, you have a lot to worry about. Rich people can decide to use electricity for unnecessary things that they consider pleasurable. Who cares? They only have to pay the same amount as an average income earner who needs electricity to get warm on a cold winter evening. The US government decided to sell bonds to solve the problems of losses suffered on the energy project. These bonds are more like contracts established between the government and the people. In this case, the government is borrowing money from the people and promising to pay it back with interest after a certain number of years. By doing this, cash is available to offset debts and cover losses. While this may have been the saving grace for the UK's economy, this prospect has a huge problem. The pound is currently unstable. Any investor looking to make an impact after getting a loan would need to buy the UK's bonds at a very low interest rate, wait for the period when the bonds appreciate, and then cash in on the interest rate. For example, an investor may decide to buy a bond for $1 million from the UK government. That bond may have been worth about $1.04 million in return around January this year. After paying off the interest loans of 2%, the investor is left with $0.02 million as a profit. So that means that for every $1 million invested, there is a return of $20,000. However, since the pound has plummeted to new lows recently, UK bonds are no longer worth the trouble. Investors have begun to cut losses to avoid losing their entire assets. This will also take a toll on the UK bond market. To stop more crises, the government will lower bond rates and raise interest rates for people who want to buy bonds. Unfortunately, this scenario will only worsen the situation as bonds will no longer carry the same rates for the first set of investors. So, if an investor buys 100 bonds at £100, another investor might get the same 100 bonds at £90, but with more interest rates. It goes on and on like that. Of course, interest rates have been increased to encourage citizens to buy these bonds, but the reality is that as the pounds fall to deeper depths, there are no assurances that the bonds will be worth the same price as before. Now, it is clear that the energy crisis will worsen as time goes by. Since the government still owes citizens for bonds they took, they will have to find other ways to increase revenue. It's back to more loans from the international community and more pressure on the economy. As inflation rises to higher levels, the banking and housing sectors of the UK will take direct and indirect hits. The housing market will be hit the hardest since mortgage loans are used to pay for many building projects. The banking sector will be forced to clean up the mess, and it's not looking good for them either. Citizens who keep their hope in their bonds will have to cut losses so they don't suffer more than they already do. Banks will be forced to lower loan interest rates or sell more bonds to prevent more losses. Unfortunately, with the pound doing terribly in the international market, it's only a matter of time before the banks realize they are in a deep mess. Ultimately, the UK is not just faced with an energy crisis when consumption is at its peak, it may also be on the verge of an economic collapse. As more people pull funds from bonds, these bonds will be sold at lower rates, affecting economic relief. The current economic pressure also means a spike in mortgage rates. Banks will have to raise their lending rates to get out of the mess they are in right now, and this increase will affect all areas. Since many mortgages are financed by bank loans, there remains no doubt about how citizens will default on mortgage payments. They are also faced with higher mortgage rates due to inflation, energy costs of daily living, and the fact that their safety nets, bonds, can no longer save them. With time, many housing projects will become problematic as there aren't enough funds to continue them. Those with defaults on their mortgages will be forced to forfeit their homes and take to the streets for shelter. In the long run, the pressure will mount on the government to provide alternative options to ease the economic problems, and this is where it gets really tricky. Besides the aforementioned, there are strains on other parts of the economy. Prices of utility goods, like food, are being increased as there isn't enough money to pay for their storage. Logistic companies also suffer huge losses as they need energy to keep products in good condition. Combine the increase in prices of goods and services with the increase in electricity tariffs, and you'll soon discover that living in the UK isn't for an average income earner. It's like spending almost 80% of your income on basic needs alone. The UK is left with two options. One, they have to ease sanctions placed on Russia. Doing so will allow Russia to export more gas to Britain and ease pressure on the economy and the government. The average citizen would be grateful that they have to save more on energy costs. On the other hand, the UK can continue to take loans from countries like the United States, hoping there is a way around the current economic crisis. But as they take more loans, it is only a matter of time before the economy comes crashing down. So which path will they choose? hit that subscribe button and we'll let you know their next move.